Sachin says, sir, I have seen many times if market is up due to some data or event related to US, it eventually comes down. Yeah, it happens. If your market, or let's say in case our market, does not have something to contribute to the higher prices, obviously the market is likely to slide back down, right? But again, sometimes all these market they move in sync. I have seen over the years is that many times what we believe is that the market follows the news. But over the years, I have had that experience that the news align itself with the markets. All right. And that might be because of the lag between when the news is generated and when it is announced or distributed. All right. So let's say, take example of RBI policy. So RBI decides that it needs to cut the rate. So it's not happening right at the moment when the chairman is speaking, all right, or the governor is speaking. So it happens a little before that, and the information is distributed, it emanates, it goes to 100 different sources, because RBI has to inform other institutions probably about their decision and all those kinds of things. And all this information, when it goes to different people, departments, sources, everything, institutions, their actions, whatever they will affect the markets, right? They may not be directly acting in the markets, but they may be doing things that are perceived by the markets that okay, this is going to happen, and then participants react. So by the time the news is announced, market knows something and market has aligned itself with the news. Now it's not always so obvious. It is always not so clear too. Like even if the participants may have aligned themselves, but it's not necessary that the market is going to play out the way they are envisioning. Sometimes even despite the best efforts, things go wrong and many people are caught on the wrong foot. But majority of the cases, the news will align itself with the markets, right? Or by the time it becomes public, the markets have already factored most of the things in. All right. So coming back to US, back in the day, there was a time when I used to, keep awake late till night watching how the US market closes, this and that. But then I realized that no, if you are trading US markets, monitor US markets. If you are trading Indian markets, it is better to monitor Indian markets. All right. That is a conclusion I have reached after so many years. Yes, there are surprises. There are gap ups and gap downs that are very difficult to deal with. But then you have to adjust in such a way that your trading method uh, kind of takes care of all these things. Okay. It accounts for all these things. It will help you protect your capital in case of these big gap ups and gap downs and all those kinds of things. So it is up to you. It is up to you how you design your trading system, how you manage your risk, handle your risk, so that these weird volatile moves don't affect you. Okay, or even if there is something drastic going on in foreign countries, that don't affect you. So it is up to us now. We cannot avoid it, so we better learn to manage it, right? So yes, not necessarily always the market will come down. Sometimes it doesn't, and then it can catch you on the wrong foot. So be careful.